Hey, this is Jack from Alpha Charts with a state of the market video. Today is April 15th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you haven't yet, please subscribe to my YouTube channel. I appreciate it. And you can follow me. You can find me on Twitter at AlphaCharts365. Okay. I just rolled in from a few days off. And so I'm going to be checking these charts out pretty much. I haven't looked at any charts in the last couple of days. So this will all be completely fresh to me right now. Let's start with the S&P or the SPX. And so just on first sight, I think listen, you can't be negative on this market, too negative, if price is above all of the moving averages and they're all going up, right? I mean, so we have, some pretty strong action here. Now, is it a good sign that this, really, didn't really close strong on Friday? No, it's not a great sign. And I still think that, this 4180-ish area is a very, very key level, right? Once we clear that, that's a big deal, right? Right now, we're still in this kind of, maybe a top type pattern, but again, you can't get too bearish as long as we're above all moving averages, and we are, and the 200-day is starting to incline again. Let me just see. Actually, you know what? Let me just get rid of the drawings. Yeah. So I just want to see the 200 because it's kind of overlaid with the VWAP from the bottom. But yeah, I mean, it's starting to, go from a flattish look to an incline look. So we're getting there, right? I mean, it's not a little bad breakout. You could even potentially call this a double bottom, right? So one man's head and shoulder top is another man's double bottom, right? That is for sure in play right now. So not terrible look on the again, and no one says that we have to go up or down. We could just go kind of sideways chop in here, which we've been doing literally for a year, right? Since, I mean, in this general range area, I could say since July of last year. Easy. And if you really want to go further back, we can say we've been in this range since May of last year. And that was just about a full year's worth of work, right? Right there. Look at that. May, around May. That's a year's of sideways chop. Something to look at again. And so I'm just trying to look at all angles here. Look how wide this is. And now this chop is starting to get tighter. I think maybe there's something to that as well, right? A little tightening action of this choppy area. 4180, though, that's the key level, I think. Right around there. And we're very, very close to it. Nice little consolidation. Would like to see breadth expanding. We're going to look at that next. By the way, on the week, 0.79. So it was a green week. Everything looks pretty good for the week. Looking at RSP on the week, and it was 1.09. So RSP outperforming SPX. So that's nice to see. But that's breadth expansion, right? That's exactly what we want to see. Again, a pretty good, more like a bottoming look than a toppy look, in my opinion, on the RSP on the weekly. And looking at the daily, again, it may be choppy, but it's more of a bottoming look than a top look. We did make a lower low back here in March. And so now things have to kind of repair again. The 50-day is declining, and that's right where price stopped on the equal weighted. So a little more work has to be done in here, right? But with that being said, as long as we're above this 200-day, which is flat, I think it's constructive. And so let's look at RSP versus SPX. And I think this will give us a good story here. And so, on the daily, is this some kind of bear flag in this ratio chart? Maybe it definitely could be, right? So if we see that breadth really deteriorates again and kind of confirms this, that would be the bearish scenario by far, right? And on the weekly, you can kind of see it more clearly, just some major breadth destruction in February and March, right? End of February, really March. And then we've been kind of choppy, but we haven't really rebuilt it yet. And so I want to see this start to rebuild, right? And this to kind of turn the corner and start to turn back up. We're not seeing that yet. And that's definitely, I think, something that's key to look at for sure. Moving on to the Qs. So here are the Qs. Again, this was we went from lagging to leading a few weeks ago, over a couple months ago now. And you see how this VWAP from the top has been very important. And we're literally just tangled up in it right now. It's hard to say that we're barely above it. We are above it. But we're basically tangled up in it. And so we will see if it falls back underneath it or if it can break out above it. Right now, it's hard to say anything, but this is a bullish look to it, right? The Qs look bullish, in my opinion. Nothing wrong to see here, especially if we get above 321, right? Above 321 is really bullish. A little distribution showing up in here, though, right? So we have to be careful with that. Little distribution. But only price pays. And so this is nice to see the 200-day starting to move back up, 50 up, bullishly aligned, little consolidation-ish. On the week, up 0.16. So basically a sideways week, right? So we had the nice big up. And again, this went up from top to bottom, right? 13%. So now we have 2 weeks of basically sideways movement, no action. It's hard to be bearish that type of action, right? Especially above this VWAP. Looking at the equal weighted Qs, and again, it did outperform slightly from the weighted Qs, and this does look more like a bottom than a top. I don't think anybody can argue with that, right? To me, this doesn't look like toppy. Now, we have a defined area, the 70, we'll call it 74 area is what I'm watching. That's a key level on the equal weighted Qs. We get above that, I think we could go long technology in a big way. But we're not quite there yet, right? Looking at the daily, you can kind of see how it's just, again, trying to make that bottom with the 200-day starting to turn back up. Looking at the ratio chart, very similar look, though, to SPX, right? This breadth, we need to see this start to rebound. Again, if it narrows like it's been doing, right? So this was a good look, right? Starting in October. That's what we're looking for. This, not so much, right? And it started really in January and started to deteriorate. And then really started deteriorating in March. Big move down. So we'll see what happens here. But again, I'd like to see expansion in this area. Looking at IWM. So weaker than the most. And again, this is considered a risk on type of chart right here. Is this a bear flag? I don't know, maybe not. Look on the weekly. Weekly it was up. IWM was up 1.5. Nice, but again, we have nice resistance right around 179, 180, right? So 180 is a big deal. 180 is where the 50-day moving average, 50-week moving average is. It's where the 200-day, 181s were right where the 200-day moving average is. And so we're about to get this bearish cross within the next, maybe this week, right? Of the in the IWM. And I think that's something to take note of, right? A lot of indecision, flat 200-day, a lot of indecision on this one. 180-ish, we'll call it the 200-day moving average is right now, the thing to watch. 50-day is screaming lower on a daily basis. Let's see where it's 49. There's your 50 right there. So this week, as we get rid of this data, it's really going to start to turn lower and probably will get across this week unless price gets back above it, right? But again, watch out. I think what happens in the IWM is the second thing to watch, right? That's going to be that's if it breaks down from here, that's going to be maybe leading the rest of the markets. And if it just kind of moves sideways or goes higher, I won't call it bullish. I mean, it goes higher is bullish, but if it goes sideways, you could say, well, it didn't break down, and that in itself could be a bullish look to it, right? Just by moving sideways, right? It means the bears may be getting a little tired, right? Now we start to get a breakdown here. This could be a pretty significant breakdown, right? I mean, just looking top to bottom, that's 15%. And then somewhere around there, right? So that'd be, 150-ish, 152, 150, somewhere around there. It doesn't be exact, right? That's a big deal. It'd be a pretty big breakdown just from the measured move perspective. So direction of IWM is going to be key. We may get the results this week. Again, we're back in earnings season, right? So that's going to give us some information right there. IWO, I think, looks pretty much the same. For the most part, the same. Still underneath the declining 50, 200-day, maybe looks a little bit better. Hard to tell right there. And then the mid caps. And here's the mid caps. Again, maybe it looks a little bit better, but still has that underneath the declining 50-day. Again, these are equal weighted, the last, IWM and mid caps. So, flat 200-day. I mean, right there, if you see a flat 200-day, that literally screams indecision on the longer term trend. And you just have the 50-day kind of wiggling back and forth, and the smaller moving averages going back and forth, a flat 200-day. That's a problem. I really thought we were going to start some stage 2 up here. We're still waiting for that to happen, right? If pricing get above, obviously 500, but even start to get above the 50-day, that would be constructive. Right now, my guess is this week we're going to get rid of this data, and whichever way this breaks, it's going to be a big deal. So looking on the indexes in general, there is a lot of question marks. I mean, I wish it was more clear cut, whichever way they break. I think the cap weighted stuff looks way better than equal weighted stuff out there. And maybe an issue with breadth on the indexes, and then maybe the cap weighted may be hiding a deterioration in breadth. Okay, let's keep going and take a look at the sectors. XLF. So big banks had their earnings, and we were looking for XLF and potential bear flag here. Now we got a gap and crap, and we're about to get a bearish cross right here on these moving averages with price still below the 200-day. So I'm not saying that, listen, my line could be wrong. I could say, okay, well, this is the proper line. Right? I don't know. And maybe it's long in the tooth in creating a bear flag, right? So let's not even worry about bear flag at this point. Let's just look at price action. Looking at what happened when the banks reported big up, and then it literally gave a lot of it back. Big indecision candle right here. Long-term moving averages says lower. Shorter term says it's better. And so again, indecision on XLF. I still think that however this breaks, again, it's got to get above this 200 for me to say all clear, which will also be above the 50 at that point. But if it breaks down, whether it's this trend line or whatever it is, again, I could maybe say, right, something like this, and say this is some kind of wedge that's happening right now, right? If this wedge breaks lower in XLF, 1, you could be short XLF, but 2, chances are the market is not doing well at all, right? Definitely don't want to see that. So a move lower, a gap down below, 32.25, and breaks down into breaks this right here. That could be a trouble, right? So watch XLF for some clues. And I think it's a big deal. Looking at semiconductors. Again, yes, we're above a rising 200-day, which is great. and we're still above this green area. That's a positive, right? Is this only a retest of this? Maybe some decent distribution showing up on the index level. Maybe, right? So as long as 193 holds, right? Or even you even say 189. As long as 189 holds on XSD, we're fine. But there's some mounting pressure up above, pushing the slower with the big mighty 200-day coming back up. I mean, this is a fight right here. And so anybody that says they know what's going to happen here is lying. There's no way to know what's going to happen. That's not looking great. Looking at SMH, again, looks a little bit better cap weighted. And, I was hoping this is an inverse head and shoulders, right? And there's a breakout, but then it came back in. So is that a false breakout? I don't want to call it a false breakout quite yet. If it gets below that 50-day, that would be a big problem, right? And I haven't looked at XSD versus SMH, equal weighted semis versus non-equal weighted. Yeah, so you can see how really the cap weighted semiconductors are, really outperforming the equal weighted semiconductors. So your big boys, your NVIDIA, right? That is driving some of the strength in semis. Okay. Again, a breadth issue, potentially. Looking at transports, up below the 200-day, 50-day going lower. And then let's look at housing, XHB, above the 200-day, right at the 50, basically. Again, indecision. And let's just look at ITB as well. We're here. I was saying how this could be a big cup and handle in housing. So it's to confirm, right? Don't just blindly buy anything, first off. But ITB, the home builders look better, right? Pure home builder play right here. So that's encouraging, right? So let's see. Financials still have to pick a decision. Semiconductors aren't looking so hot. Transports under the 200-day. So only housing. And again, this is what I consider for employment, right? Employment is holding up so far. We'll see if that continues. But so far, so good on housing. Again, so a lot of indecision showing up, right? Indecision. That makes me worried. Let's go ahead and clear some of this data off and look at the internals. First, the VIX. All right, so here's the VIX, and I thought it was low when it was in the 18s. Again, I have the orange line at 1650. It's what I put in there. I think below 1650 is considered extremely low. Now, it can live below 1650, right? So it got all the way down to, back in 2019, super duper low. This is like crazy low, right? Like VIX was living under 10. Crazy, right? So right now it's at 17. But you can see once it gets under 16, we tend to get spikes. So expect some volatility, whether it's this week or not. I don't know, right? Because like I said, we could live under 1650. But recent action tells us that we get to in the 15s, we're going to expect a spike, right? Again, maybe, and it doesn't have to get down there. It could do it beforehand, right? No one says you have to go that low. But we're getting to that rubber band getting stretched, right? That's what this is. It's stretched. And the more it's stretched, the greater that volatility is going to be. So let's see what happens with that. But again, so volatility maybe as a contrarian, whether it's this week or next, coming back maybe. Looking at credit spreads, let's see what they did this week. Coming back in a little bit, that's positive in my opinion, right? Unless we see a spike, and at this point, something that takes out 1.61, that's positive. End of story, right? There's no way to look at that any other way. Looking at put call ratio for sentiment, on the bullish side, but nothing extreme. And then let's look at MMFI, which is a percent stocks above the 50-day. And we are seeing some breadth improvement here, right? So that's a positive, right? More and more stocks are above the 50-day as compared to, middle of March, so a month ago, right? So maybe some improvement over the last month. but nothing to write home about. Okay, let's look at THL. This percent stocks above the 200-day, and basically the same look. Improvement, but nothing to write home about yet. So that's good, right? So even though we saw some degradation between equal weighted and the cap weighted, when you actually look at the percent stocks above the 50-day on the New York Stock Exchange, it improves some. We'll take it. We will take it. Looking at the dollar, and the dollar, we have a bullish outside reversal candle in this green area, which has been support in the past, right back here, February. And so we'll see if we get a spike from here. Again, a spike in the dollar, chances are the VIX will be spiking, chances are credit spreads would be widening. That's what the look looks like. If this rolls over, and again, this looks more like a top than a bottom. And even if we look long term, I still think this looks more like a top than a bottom. We break below 100. I think we're getting just the opposite. I think we're getting a ripping, roaring stock market. So the dollar, pretty key right there, right? The dollar above 100 or below 100, DXY, right? But that's important. What else? Looking at the 10-year yield, again, kind of in this choppy area, at 3.5%, and really just moving sideways, but lower highs and lower lows happening right now. Again, and this is not a bull flag or anything like that. It may have been looking like one early on, but way too long in the tooth for that to happen, in my opinion. Lower highs, lower lows. So if 10 years going lower, people are piling into bonds. That could be a problem, right? But if 10-year goes too high, and really it's not even if it goes too high, it's the big movements in the 10-year, right? So we don't really care that it's accelerating. It's the rate of acceleration, right? Rate of change that we are really worried about, right? This doesn't bother me at all. It's spikes. So just remember that, more important than anything else, right? Because that's what shocks the markets. The meandering, the markets adapt, is what it is. I don't make the rules. Gold. So gold trying to break out and got rejected literally the same spot it did in 2020 and earlier in 2022. Again, trying so hard to break out of a gigantic base. And then maybe it will, maybe it won't, but we did have it come in a little bit. And we'll see what happens with that. Bitcoin. Let's do Bitcoin too. What the heck? Bitcoin on Coinbase. I like that one. All right. And Bitcoin, broke out of 30,000 above the green area, above the VWAP from the COVID lows. These are big areas that Bitcoin has retaken. And if it can stay above, we'll call it 30,000, 29, 30,000, somewhere around there, and just kind of consolidate, that would be very, very bullish. Something like, even doing something like this, that would be really bullish. So crypto also saying more of a risk on look. So let's wrap it all up. We have the indexes, which have some uncertainty in them, but above the moving averages, you err on the side of the long side on the cap weighted. RSP was, again, wishy-washy, right, with being below the 50. But in one day, it can jump above the 50-day and things can start to really look good again. So, I don't think that this is a market where you want to be crazy long the market or crazy short the market. And it's still extremely volatile. Taking profits quick makes sense. Having high cash makes sense until we get better direction. We're not going to make 1 week doesn't make us, right? And again, there's just a lot of unknowns, especially now earnings are back in. Earnings are back full swing now. So just be careful with that. Be careful. I think it's still a cautionary market. A lot of unknowns, but we talked about equal weighted Qs. We talked about the IWM, mid caps. financials, the dollar, what those all kind of resolve to. Those are the things to watch. Hope you all are doing well. Take care. Talk to you later. Bye.